All right, we're in beautiful Reno, Nevada. My name is Ben Florsheim, and Jenna and I are with Coldwell Banker Select, and we are lovely real estate agents here in the area serving all of Northern Nevada and California.
Yeah, absolutely. My name is Jena Lanini, and we thought we've done the podcast before, and it's always been very fun to bring good information to folks. But we have been listening a lot more to podcasts that bring relevant information to our industry, and I think that it was super inspiring. And most people know like Broke Agent Media and the information that they bring to us, like super valuable. But we also thought we should do that for our followers or anybody that wants local information as it pertains to national news. So this is our shot at that, and hopefully bringing you like weekly-ish updates, quick, short, about what's relevant this week or around the week. So clearly we have to start with 50-year mortgages.
50-year mortgages, right? And just to bring why is that relevant right now? And again, I mean, we're bringing you guys information as soon as we get it that I think will be timeless, but also relevant right now,
Yes.
right? So we've got midterms coming up
Yep.
next year. And so we're starting to hear some of these policy changes that our administration, right, thinks is relevant and important
Yes.
to the people of the United States.
Or in the layman's terms and politician hater, clickbait stuff that may get them elected.
Right, and even further down the line, the affordability crisis.
Yes.
I mean, that's what we're really
It's the hot
talking
button.
about. Yeah, and the three items, which I think we should do multiple podcasts on, are going to be the 50-year mortgage, the portable mortgage, and
Yeah.
Fannie and Freddie are talking about getting rid of the 620 credit score for FHA.
Yeah, which I got several texts about
Yeah.
just this weekend. So that's actually, I mean, so a lot of this stuff is good. I think that sending or putting out solutions or possible solutions to this crisis is obviously the direction we need to go. And it's a gripe that everyone has, you know, from first-time home buyers to investors. So clearly, like, solutions are great, but will these be effective?
Right. So I think the other thing really to talk about too, and why I think Jenna and I click so well is we have not very, right? Because at the end of the day, we're trying to do what's in the best interest of our clients.
Yeah.
But we have, different opinions and different ways we think about stuff. And so we get to feed off each other and help our clients even more
Yeah.
because we get both sides.
Yeah,
right?
for sure. And pointing out different nuances of these things that you may know better. I mean, know better than me and know better than most, I think is really cool. And then from a different perspective of, I think I look at things in not like a more emotional sense, but I am the person that'll call out like the clickbait politician. Like, what is this really going to do for people versus is this going to get you elected? And that's not always the best way to think about things. Right. And we should really look at the details because I think these things could be great.
Right. And I think so some of the history of the mortgage, and I'm going to get some of this, because I, kind of went through some of the history during the roaring 20s and after that, right, when we had the recession, they started with a 20-year mortgage.
Yeah.
And then about, 15, 20 years later, they introduced that 30-year mortgage. So with that, right off the bat, things change when the most pain is affecting the most people.
Yeah.
And so if we take that 10,000 foot view, right, we're in a affordability crisis.
Yep.
So one of the solutions that's being proposed is this 50-year mortgage.
Yeah.
The average homeowner right now is in their house from 7 to 10 years.
Yes.
Where that has dramatically changed over, our lifetime and over the generations.
Yeah.
And basically that 10-year span, right? So is it worth doing a 50-year mortgage, adding this 20 years on?
Yes.
Right, and that's what we're here to talk about. So on an average savings per month, it's about $350 for a $500,000 loan amount.
Okay, so with that though, so your savings of $350 a month isn't necessarily like, it's not going away. It's getting spread amongst the other 20 years, right?
Right.
So in theory, if you're really only going to keep your house for 7 to 10 years and you want a lesser payment, that's a huge help. My caution comes from just that, the spreading of the savings over the other 20 years and how it affects your equity negatively.
Right.
So right now we have a huge problem, and probably markets across the country, of the COVID catch-up. So if you're in certain neighborhoods in Reno Sparks, you paid 25, 30,000, sometimes 50 over asking price. If you go to sell today, you are not getting that price back. You have not made that appreciation gain because your home probably wasn't worth what you paid, is the sad state of it. So then you remove all of that, and then you add this type of loan, and you're gaining a fraction of the equity because your principal payments are so much lower. So if you think about 5 years, which is kind of where we're at with COVID, those people have not made their money back. Is it going to be a similar thing? Like in 5 to 7 years, are they going to have equity to be able to move like most folks do in our generation? And generally it's because, myself included, I bought a condo knowing it was the only thing I could afford. I would not be there long. I just wanted a place to get my foot in the door, get a little equity, and move up.
Right.
I don't think that these people will be able to do that.
I part of me agrees a lot with what you're saying. The difference with the COVID and what we're running into as agents right now is those people are in extremely good interest rates.
Yeah, for sure.
Right. So we're talking about this in a very elevated interest rate environment.
Yeah.
The increase in how much homes cost versus what people are bringing in on a monthly basis has not kept up, right?
Yeah.
So we're talking about a Band-Aid fix. And that's what ends up happening over history is we kick the can down the road, unfortunately.
Yeah.
And that's my opinion. And this is another one of those things where they kick the can down the road. My question to you would be, I hear what you're saying with the equity, and my hope for people that need to use this 50-year mortgage to squeeze into that payment is that they take that opportunity that when interest rates get better, when there's opportunity, when there's an increase in their pay, or something changes for them financially in the better, that they refinance, right? They refinance into a 30-year, they refinance into a better payment.
Something else.
So that they can do what you're doing, right?
Yeah.
I think of this as an opportunity for those people that are just out, right? Just out, and we create an opportunity for more people to get involved in home ownership.
Which I think is great. And I think it's a phenomenal opportunity. If somebody sees the difference in like, my life is going to change in this way, you know, I'm getting out of school, I'm going to be making more money, all of those things. Yes, I can refinance. Great.
There's fear.
There's fear, and I don't think that it's going to be the solution. But it's a solution, and it's not like it's going to be the only loan product, right? Like there's still going to be 30 years. There's still going to be 15-year mortgages, which are phenomenal too, to actually increase the pace of your principal and your equity growth. But definitely a solution that'll be interesting to watch. Okay. So portable mortgages. This is another really interesting thing, and on surface, face value, super cool.
Right.
Take your interest rate that these people are sitting on, won't leave. I got my 3%, I got my 2%, my guy in Fernley. I don't really want to sell it. Can I take my loan somewhere else? Okay, well, assumable loans have been around forever, and VA, FHA, and I've even marketed assumable loans. I marketed my assumable loan. They're so hard to take over and for people to get qualified. And the number one thing that people realize when they ask, like, oh, I want your sweet rate, give it to me. Great. You can only assume the balance of my loan.
Right. So you have to come up with the cash.
You have to come up with the cash or get approved with the bank for that difference. People won't want to do it. People don't want to do it. And then you have to use the same servicer, blah, blah, blah. So these portable mortgages, you're going to take your balance, you're going to go to your next house, and you're going to have to get a second mortgage or give it in cash. And will it be a Band-Aid with a roadblock that people will not actually be able to utilize?
The portable mortgage is something that other countries are already doing.
Yeah,
so
Canada.
It's something that's working.
Yeah.
Right? And
is it working?
Yeah, I don't know, right? Because you could say in Canada, right, they're portable, but they're also all adjustable.
Yep.
They're in 5 to 7 year adjustable mortgages.
In Canada, you can't do more than 5 to 7 years in a mortgage. They make you refinance.
Which can be a very, very difficult thing when you have huge fluctuations in rates.
And expensive.
Right. So I think it's a great idea. I think it's a great concept. It's all of this stuff, right? I have that investor hat on where I go, everything that we're talking about is great for a specific buyer.
Yeah, for sure.
Right? That understands what they're getting into, understands what their future holds.
Yeah.
Right? We can't control the market.
Yeah.
But we can have goals and plans.
Yep.
And so if those goals and plans align, these are both great products.
For sure. And I think, like I said, a solution that has some sort of new option, I think, or new revised option is a good thing. But I am interested to hear what you think. I spoke on this a little bit yesterday, where I really believe the solution is, and that's overall world solution. If you really want to look at like what's going on with our country and the divisiveness and the blame and the negativity, and that always is the stuff that sells. It's this person's fault. Let's take from this person, give to this person, and I just don't believe that's the way to solution for that's a solution for anything. It's another whole concept I take into my leadership journey and why I'm involved in the association and different local boards. And I think overall it's a big thing to think about, incentivizing other people who have the capabilities to build, create, give opportunities to other people that don't have those. And we are not doing that. We're not doing it. And so that's where I think the problem is, because we need more developers,
right,
corporations, so not even just builders, but people that bring jobs.
We need to make it easier for them to enter the market.
Yeah.
And if you want some clickbait stuff, I think a great solution to our mortgage problem, if you want to call it a mortgage problem, because it's really more of an unaffordability issue, but it might tackle some of that, is to get rid of Fannie and Freddie and privatize mortgages.
Yeah.
And if you want, that is clickbait. You want to call me, you want to meet me for lunch, you want to blow up my DMs, I would love to talk to you about why I think that's a positive.
Okay, and so privatizing everything, and what's the one reason why that would be good?
So one reason why, right? We pull it out of the government, which, whether you agree or disagree, right? Government getting too big is a problem. Yeah. And so if we privatize that, right? I used this really simple example this morning when I was talking to my mother-in-law about it, right? If you have 5 options for eggs, all of those producers have to come in with a better price.
Yep.
If you have 1 option for eggs, they can jack up the price as high as they want.
Yeah.
So it's, if we give multiple options for mortgages, there's more competition in the market to create a better product.
Yeah.
A cheaper product.
Yes, but then you also have to factor in VA and the importance of having those options for people. And I'll always stand by that, like VA options for people that have served our country. So I do, because I'm a big believer in less government too. But I think there's a time and a place.
I believe that the government should pay for our veterans.
100%.
I'm more for FHA, conventional, right? These other loan products that have huge barriers to entry.
But the other thing too,
and they're
though,
all
is
in fees and costs and add-ons and.
Okay, and is there any positive in having some sort of safety net for these loans if people go under? I mean, that is another portion of this conversation that probably should be had. I mean, because government-backed loans, there's a sort of security net for people in case default occurs.
And that's why our government balance sheet continues to get bigger and bigger.
Yeah.
So it's a huge circle of stuff, right?
Yeah. It'll be interesting to see for sure. And I think that as these conversations start to play out too, it's really interesting. And there's always going to be people that are against these things. Right. And when I speak in opposition of them, it's really just from a place of homeownership. And I don't want us to stray even further from people owning less, because I think that's the huge thing we need to be scared about, which is like more my conspiracy theory hat. Like, we need to be owning more. Right. And so I think, if you guys do want to talk about how, okay, if you're saying, well, I don't have the ability to, because I'm sure there's some people saying that, like, I can't afford it. Right. Let's talk about how you can afford it, because there are great government programs. We can get you in touch with a lender to do 0% down. There are forgivable loans, usually 30 years now, but who cares? Because it's a fraction of the cost that you don't have to come up with right now that gets you in the door when you don't have to worry about like, extending in more interest and all the things. So worth, repeating that I get told a lot. People are happy they call because they thought they couldn't buy.
Right.
And you can.
That's our primary, that's what we're here to do, is help people get into, property and understand the process.
For sure.
And feel really good about the process. And what I'm talking about, this clickbait stuff, probably will never happen.
Yeah.
The last thing that kind of goes, I think, is a good segue into that, the talk of getting rid of the credit score.
Yeah.
And I'll just give you my quick 2 cents on it. Again, I go back to the competition.
Yeah.
These credit bureaus have made it a thing that we have to use their credit scores.
Their scoring system.
Yes.
That makes no sense to most average folks.
And people don't understand that our lenders pay exorbitant amounts of money to pull those credit scores.
Yeah.
That gets pushed out onto you as the consumer.
Yeah.
And I have a deal right now with a guy who is, from a debt to income standpoint, is very well qualified, has been in his job, has made very good decisions, is doing really well. Made one bad choice.
Yeah.
And bought a timeshare.
Oh yeah.
And it screwed up his credit.
Yeah.
And
Those
so
are horrible.
he cannot qualify to get into a house because of his credit worthiness.
Yeah.
And so that's where I go, hey, debt to income and job history should be plenty.
Yeah. And not this credit score system. So, but
because
this
you made one bad decision.
But this is not removing credit scores. This is reducing from.
So I heard the clickbait that I saw was
Yeah.
for FHA, they're going to remove the 620 credit score.
But even, and that could be, I'm ignorant to the details on this, but even in my world, I get people approved in the 5s all the time.
But they're getting charged, right?
Yeah, but still,
Yeah.
like, and again, yes, you talk about affordability, so maybe that is a good solution for that because you're charging people for the one mistake they made.
Yeah.
So that is interesting because I always say to myself, because people are like, my credit.
Yeah, don't get me wrong. You can qualify, right? I just think that
But it's just like when they say you need to have above a 740 or whatever to get a better conventional rate.
Right.
Okay, interesting. And I do like the concept of that just for saving fees because a lot of this stuff is.
Yeah, because
So
we
expensive.
are in an unaffordability crisis. So
Yeah.
that $50, that $25 a month,
Yeah.
it matters.
It matters.
Hugely, right?
Yeah. No, for sure. So a lot of interesting things I think are going to unfold the next couple of weeks, especially as we head into midterms and 2026 and rates may be coming down and Fed cuts. And I think we'll have a lot of good information to pass on and start having some good conversations. So if you guys have any questions, feel free to reach out and we will chat or maybe we can debate.
Sounds good.